If they can start to show improvement in that area, I think that's going to give investors a key signal that, all right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about a company named Skillz, stock ticker SKLZ. Skillz recently put out a press release saying that they were going to be releasing their fourth quarter results shortly. So I want to go through that press release, and I want to do an update on Skillz because we've covered this stock several times in the past. So this is a small cap, high growth company. We cover these a lot on the channel. So if any of that's content that you enjoy, please subscribe to the channel and hit the notification bell. And of course, if you enjoy this video or get anything out of this video, please smash the like button and feel free to drop a comment below. Okay, so let me start with their press release. Skillz announces date for fourth quarter 2021 results. So this is going to be their fourth quarter, so we'll get the fourth quarter results, we'll get the annual results for 2021. One of the reasons that I'm looking at this stock is because the stock price has been beaten down to a place that I think is mind-bogglingly oversold. We're in a little bit of a strange market where there's companies that are down 80 or 90% that still have a potentially working business model, that are still in a growth phase of their company. So obviously at some point it starts to be a decent risk reward if you think the company isn't going out of business. Okay, so they're going to announce the fourth quarter. Let's just take a quick look back at the third quarter results. All right, so back in November, they reported the third quarter, which was the period ended September 30th, 2021. Skillz announces Q3 2021 results, delivering 23rd consecutive quarter of revenue outperformance. So you can see this is the very definition of a growth company. These guys have been growing quarter by quarter by quarter for years. Revenue grew 70% year over year, and paying monthly average users grew 47% year over year. So that is a crucial number right there. Officially launched mobile version of the iconic first-person shooter arcade game Big Buck Hunter, so we'll talk about that more later. So I'm just going to go through this quickly because it's about to become old news in a week and a half. Revenue of $102.1 million in the third quarter, up 70% over the prior period. This was driven by 47% growth in paying monthly active users over the prior period. So again, there's that 47% growth of active users, and that is what they're looking for. They're trying to attract people and then obviously keep them as active users. Gross profit was $94 million in the third quarter, up 66% over the prior period. Their gross profit is like 95%. That is not the problem with this company. They really have one issue, which we will talk about. And if some point they can improve on this one issue, I think they have a big future ahead of them. Okay, so this was a press release on September 23rd. So we talked about this. Skillz declares open season for Big Buck Hunters. So they're doing mobile tournaments. This is a big brand name, so this was a big release for them, and they had great success with it. One of the complaints that I get mostly when I do a video on Skillz is that their games are not good enough. So to me, I don't play their games, honestly, so I don't know if that's true or not, but I do know that is a fixable problem. And this game right here actually was a big hit. So they don't need every single game to be a big hit. They need a series of hits. They've got one. I'm going to tell you another one that I think is pretty much destined to be a big hit, in my opinion. This was announced quite a while ago, but the launch will be at the beginning of the 2022 NFL season. So as you can see, NFL and Skillz launched Game Developer Challenge. Ultimately, finalists will present their creations to the judges to win the coveted rights to brand their game with the NFL and club logos. The NFL and Skillz will launch and provide cross-platform promotion of the winning games to coincide with the start of the 2022 NFL season. We know that the NFL has a very large audience, and for Skillz to be able to match up with them, I think this is another thing that's going to help put them on the map. The other significant thing that's happened since their third quarter press release is they raised $300 million of senior secured notes. So I'm just going to read a little bit about this. So this was totally non-dilutive to shareholders, so that's always good news. This gave them a lot of cash. They already had some cash. We'll talk about that. And with this additional cash, they have a very nice cash runway. So one of the things I look at with a stock that's down 90+%, at that point the stock is priced to go out of business. They have a very viable business. You can see their revenue has grown every quarter that they've been in existence. They have cash. They just raised an additional $300 million of cash. So they've got a lot of time to continue to develop out what they're doing and solve their one big problem that I was talking about. Now I'm going to show you what that issue is. Okay, so quickly on their balance sheet, you'll see they had $540 million of cash before they raised that $300 million. So they have significant current assets, whereas their current liabilities are only $80 million. So they have an outstanding current ratio as a company, meaning they're not going to run out of money anytime soon. Also meaning it is highly unlikely they're going to need to raise any money and dilute your capital anytime soon. So those are two positive things. Now let's get to their problem. Cost of revenue of $7.6 million. So you can see that leaves them at above a 90% gross profit margin. So that is not the issue. Research and development, I get that. This is a tech company. They need to continue to expand. They need to continue to grow their technology. So that's an important cost, but it's a small one in comparison. Their real issue is sales and marketing. $114 million of sales and marketing on $102 million of revenue. They spend more to market this than they do in collecting revenue. So at first glance, that could sound like a disaster, but this is actually very common with startup companies, particularly internet platforms that are looking to increase their user base. And so in the first few years, they have to very heavily invest in gaining users. And the two things they need to do are gain users and sustain those users. So they need them to stay. So the main issue that this company is looking at is, at some point, can they scale back on this sales and marketing? Because their revenue continues to grow. And we'll look at their fourth quarter projections, and in a week and a half, we're going to find out the fourth quarter actuals. But the top line revenue continues to grow rapidly. At some point, can they wean themselves off a part of this sales and marketing and get it down to a manageable number so that they're making a profit? Because you can see thus far, they have not made a profit as a company. General and administrative expenses were $48 million. That's about 50% of sales. I think that will continue to become a lower percent of sales as time goes by. That's a little bit high, but that's not their issue. Their issue is this sales and marketing number. If they have to find a way to get into a formula where sales and marketing expense is significantly less than revenue. Now, they don't need to do that next quarter. Like I said, they had $540 million on their balance sheet, and they just raised another $300 million in non-dilutive cash. They have a lot of money, so this is really their investment in the future. The question is it going to pay off? So that's the real issue. Do we believe that at some point over the next couple of years, they're going to reach a critical mass of customers that are return customers that will allow this ratio of revenue to marketing to get to a reasonable point and allow them to make a profit? Obviously, I don't know the answer to that question, but I don't think that what's happening here is altogether unusual. So the fact that top line revenue is growing so much, so fast is very encouraging to me. At some point, you would like to see this start to balance out a little bit more. So I think 2022 is going to be an important year for them. I would say by the end of this year, we need to see progress in this equation right here, or their stock price will continue to stay at this low number. There's one other thing they can do with this quarterly release that may help the price of their stock. This is Yahoo Finance, and basically they're comparing analyst estimates to actual. So the 4 quarters in a row, these red dots, a red dot means a miss. They're not missing on their revenue projections. They're doing very well on revenue projections. They're missing on their net income, or in this case, net loss. So they're having larger losses than expected. Now, this is a small cap, high growth company, so typically, I think investors usually are not focused on the fact that they're losing a little bit of money. It is to be expected. They had one miss that it looks like a gigantic miss. They were expecting 9 cents per share loss, and they had a 21 cent per share loss. So yes, that was a big miss, but these are not gigantic numbers. And like we saw, they're not running out of cash. Obviously, you don't want to be losing money, so they need to be judicious with their money. But if they were to have a green dot in a week and a half where they hit their earnings, and they're estimated to lose 15 cents in the quarter. So that's right around where they've been for a long time. So I think there's a really good chance they could hit that or beat it this time versus the misses they've had in a row. If we look at the market cap of this company, in February of 2021, so that's 1 year ago now, this was a $15 billion market cap company. They are now a $1.7 billion market cap company. So this company, not only has the stock price gone down, but the market cap has gone down right with it. I mean, that is a drastic reduction in the size of this company. So let's go to the chart. All right, so this is the 1 year. So I'm just going to quickly show you from their high back in February that we were just talking about to right now, and they are off of their lows. They're actually 20% up in the last couple of weeks. It doesn't look like that on this graph because they're down so much. It's just a little blip. But you'll see from their highs of 1 year ago, they are down over 90% still today. So by June of last year, their stock price had been just about cut in half down to about $24. So if I ignore all of this run up and say that maybe this was an overbought period of time and go down to this number, you'll see that they're still down over 80% from this number, which is half of their 52-week high. Okay, so this was where they were trading at January 4th. So this is the beginning of this year. So you can see there's been no new news this year. No good news, no bad news. We're only a month into the year. Nothing's happened. They are down 46%, and that's after a big rally that they had off of their bottom. They're still very close to the bottom in the grand scheme of things. They clearly bottomed out somewhere at the beginning of February, and they have been on an upward trend ever since. Their upward journey has just begun. For them to get back to where they were last month on the first day of the year, that would be an 80% increase in the price of their stock. So that was just a month ago. Again, there's no news, no fundamentals have changed in this company in the last month. This is just downward pressure in the stock market. In addition to that, there's a massive short position in this company. So at some point, with any good news at all, this 80% increase is actually just the beginning for them. That's getting them from $4 to, just under $8. This was a $46 stock. And even if you discount that, this stock was in the 20s for quite a while. So this 80% just gets them back to $7.77. If they were able to rally back to where they were on November 8th, and that was after their earnings call last quarter. So really, that'd be almost a 200% increase in the price of their stock just to get back to that number at $12. And again, they traded for a long time above $20, and they traded as high as $46. So a price target of $12 for the year 2022, I think, is within reason if these guys can start to perform. Really, the main thing they need to do is get better at their marketing to revenue ratio. If they can start to show improvement in that area, I think that's going to give investors a key signal that they're moving in the right direction and they've turned the corner. So I'm not a financial analyst and this is not financial advice, but what I can say is this has been on my watch list. I think this is a very interesting stock and I think it's worth adding to your watch list. That's all I've got for you on Skills. We'll find out in a week and a half how the results came in. So good luck investing and thanks for watching, and we'll see you in the next video.